Welcome to Growth and Exit Strategies for Software and IT Companies, the flagship tech conference of the World Financial Symposiums. The GXS conference caters to tech founders and investors in tech M&A, covering topics like investments, growth strategies, buyouts, sales, divestitures, and mergers. Thank you for joining us. Let's begin.
All right, Tim, really exciting trends there you've identified. Thanks for the depth of research that you and your team have invested to bring this to market for us to understand. I think one of the things that's really important as you listen to Tim talk about these initiatives and where dollars are being invested is, one, what does that mean for you and your market? And are there elements that you can align with? Not necessarily you have to say something that's not true, but if you could take a look at those 10 and say, hey, I think I'm part of this particular stream, then that helps with your messaging and positioning as you look at the global market. And it gives you kind of a momentum as you're looking at buyers who are mapping those same trends into what you do, how you offer value, and where you fit in that ecosystem. It doesn't mean that if you have a business that falls in a different realm than those trends, there's no value. That's not what we're saying. But we do want you to be aware of where this big flow of investment dollars are taking us. So again, thank you, Tim. Really insightful. All right, next session today is interacting with investors and get to understand what's attracting them, not just these trends, but other things that are important to them. Really excited to introduce to you Michael Stinson. He's a senior vice president here at Quorum Group. We're actually neighbors. We're both in the Salt Lake City, Utah area, and thrilled that Michael's part of Quorum. He has a rich background as an entrepreneur and CEO as well that you'll hear about. But Michael's going to work with this panel to really kind of bring out, as investors, what's their criteria. So pay attention. I think we'll learn some good things here. So Michael, turn it over to you. Take it away.
Good morning, good afternoon, good evening, wherever you're joining from today. I'm Michael, one of the senior deal makers here at Quorum Group, and I am really excited to be joined today by such an accomplished and diverse group of investors who are helping drive innovation and growth across Latin America's startup ecosystem. So this panel really reflects the range of capital shaping the region, from early stage venture to sector-focused funds. Each one brings a really distinct perspective on why LATAM continues to be one of the most dynamic markets for founders and investors. I think between all of the companies we've assembled today, we see different approaches to backing and scaling companies across the region, which makes this a particularly timely conversation. I'm really looking forward to diving into where the ecosystem is headed and what founders should be thinking about as they scale their businesses. So I'm going to start with asking each of you to tell us just quickly a little bit about your firm, maybe where you're located and your current role. And let's start with Alejandro.
Sure thing, Michael. Thank you very much for the intro, and it's a pleasure to be with everybody here. I'm Alejandro Diaz Barroso. I'm the founder and managing partner of Dila Capital. We are an early stage venture capital firm. We are based in Mexico City. We have an office in Miami and an office in Buenos Aires. And we're investing across the Spanish-speaking Latin America and selectively in Spain and the US Hispanic market as well. We manage multiple funds and vehicles from seed to Series A through follow-on and special situations. And we've been doing this for over 15 years now. We've backed more than 60 companies across fintech, marketplaces, SaaS, consumer tech, infrastructure. And basically today we're raising our fifth fund. We are looking to deploy that capital in the Spanish-speaking world, in technology-based businesses. And again, very excited to be here.
Excellent. Thank you, Alejandro. Great to have you. Jorge, please.
Hello, my name is Jorge Gonzalez. Thank you very much for the invitation. I'm We're based out of Mexico. The fund name is G2 Momentum Capital. We've been investing for over 15 years now. We are dedicated to the early stage companies, and we have some sort of a focus on fintech companies. We've been investing in such companies for many years now, and we've been doing that throughout the region. We have companies in Mexico, Argentina, Colombia, many countries in the continent. So very happy to be here and hopefully collaborate.
Great to have you, Jorge. Thank you. How about Rodolfo? Tell us a little bit about your firm.
Yeah, thank you, Michael, and thanks for the invitation again. My name is Rodolfo Dieck. I'm co-founder and managing partner of Prosa Ventures. We're an early stage fund dedicated to supply chain, mobility, and energy transition. I'm based out of Houston. We also invest early seed to Series A, investing globally. I think 60% of our fund is North America, so Canada, US, 20% LATAM, and 20% Western Europe. A pleasure to be here with all of you.
Excellent. Thank you very much. Let's head over to Felipe. Tell us a little bit about your firm, please.
Sure. Thanks again for the invitation, Michael. So LATAM Capital, managing partner there, is a Chilean fund. We do vertical B2B software technologies throughout Latin America, mostly companies coming out of Chile, Peru, some Argentina, expanding into Mexico, Brazil, and some specific deals here in the US with the Latin American entrepreneurs as well.
Excellent. Thank you. And last but certainly not least, Rodrigo.
So I'm Rodrigo. I'm a partner at 14B. I've been investing in LATAM for the past 15 years. Prior to creating 14B, did 20 investments, 6 of which became billion-dollar businesses. And we decided to create 14B to cater to a very specific moment in the market where experienced founders are coming down the pipe to build it again and to build globally competitive companies. So we're focusing on supporting them to be successful beyond the Latin American borders. Very focused on Brazil, but look at all LATAM.
Excellent. Well, great to have everybody. Really excited for the discussion. I'll start with the first question, and maybe we'll go in reverse order, starting with Rodrigo. But tell us, what are the fundamental characteristics of companies that you invest in?
So we have a very strong bias towards domain experts. We like founders that really deeply understand the problem that they're trying to solve, that are not copycats. That's an important criteria for us. We don't want to be whatever for Brazil or LATAM or Colombia. We want to be the reference company. And a big chunk of our portfolio is actually underwriting those global ambitions, right? So we want teams that are capable to compete at a global level.
Excellent. Domain experts. Love that. How about you, Felipe?
Yeah, I mean, I'll try to build on that because obviously one of our focus is the domain. As being vertical investors, we look for that domain expertise with the technical skills. I think plus the leadership and the culture very early on in the companies we looked at. But besides that, we also look for companies that have a clear path to some structural advantage, being that data distribution, and most of them have some kind of localization specific opportunities with the product. So we look at companies that have to expand country by country, normally doing some adjustment to the value proposition and to product itself, which makes it much harder to expand because you have to invest time and resources in the product in each country, but becomes an incredible barrier, particularly for the global player. We play more for regional players, targeting the exits to that global player outside.
Excellent. Yeah, it's such a diverse market. I know expansion is challenging case by case basis. So thank you for that. Rodolfo, how about you?
Yeah, just adding on top of what my colleagues have said here, I think we usually split up the opportunities that we see into 2 main camps. Just taking a zoom out, it's either there are painkillers or vitamins, and we focus more on painkillers. We focus more on B2B companies. So we're looking to see if there's a pain point that they're solving for. I usually talk to potential customers and reference to see how it fits in their priorities of their roadmaps. So that's one thing that we look at. And then, like Felipe was saying, the technical capabilities and defensibility of the business model to make sure that they have something proprietary that makes a good moat around the business model.
Appreciate that. How about you, Jorge?
Well, we're very much into fintech, and fintech is a very large opportunity in Latin America, especially specifically because of the lack of access and the lack of very good product offerings from traditional and banks and incumbents. So the opportunity is very, very big, and we're looking for ambitious entrepreneurs that can really create products and services that can take advantage of the very, very large opportunity and are looking to expand very aggressively. We need to focus as well on the exit capabilities, because in Latin America, you cannot do any investment without a clear path to exit. And if you don't have that mapped out and sorted out, that might create a problem in the future for you. That's from own experiences, and that is something that we're very keen into looking into our new investments.
Excellent. Excellent. And then Alejandro, over to you.
I mean, I completely agree with my colleagues here. You know, founder quality is definitely the number one characteristic that we look towards, whether it be what Rodrigo mentioned regarding domain expertise or industry expertise, or what Jorge mentioned about ambition. But definitely founder quality is the most important thing. And I think it's very important across all venture capital regions. But I would say it's especially true in Latin America. You need more resilience. I think you need more intellectual honesty than in other geographies, just because cycles are a little bit harder. Liquidity takes longer. And I think that founders must be not only capital efficient or more capital efficient than in other regions, but they should also be emotionally strong. So when we're looking at, you know, what characteristics we're looking for in companies, we diligence the founders and the founding team a lot more than their business models. And so, yeah, definitely for us, founder quality is number one. Then second is obviously regarding business models, where you look forward to unit economics discipline, very early stages. So, you know, we don't underwrite growth at all costs, and we want founders who understand, you know, their margins, their contribution margins, their CAC paybacks, and a clear path to cash flow. Even at the seed stages, we do want to see how they're going to make money in the long term. And then finally, I think something that Felipe and Rodrigo both touched on was we're looking for companies with regional scalability, but that have local defensibility. So we are investing in companies that start in Mexico and want to scale regionally, but they've demonstrated their local defensibility in Mexico, or the other way around. We've invested out of a bunch of companies out of Chile, Colombia, Peru, Ecuador, Argentina, that start locally. They have a local defensibility. They have a clear product market fit in their countries, and then when they want to scale into a larger market, they come into Mexico, and that's where we come in with a local know-how and a local know-who that we believe that we can add to the companies.
Excellent. Resilience is such a common characteristic. Everybody needs it, especially on the founder side. So totally understand that. And then love the regional scalability, but local defensibility. That's a great kind of overview of your thesis. Maybe back to you, Alejandro. What sectors of the market are most intriguing or appealing to you right now? Where are you spending a lot of time in terms of market sector focus?
Yeah, so I would say that we've been focusing the past maybe 3 or 4 years on basically fintech and businesses that are digitizing offline industries. So there's a lack of financial products and services, huge lack of those products and services in our market. So we've been investing a lot in the fintech space. Let's call them payment, embedded finance, cross-border flows. We've been doing a lot of that. And then again, businesses digitizing offline industries. Before we used to talk a lot about SaaS. Now we're talking about AI-enabled services, you know, layered on existing workflows. But, you know, AI and SaaS that are helping very traditional businesses and let's call them offline industries to be digitized. So that's where most of our focus is. We have seen a bunch of, you know, B2C plays that we used to do a lot of investments in the past, and those have kind of drawn down and we've shied away from them. Hopefully they will pick up, because that's where my real passion is. But again, we've shied away from that a bit in the past years. And so we've migrated a little bit more towards B2B marketplaces. But I would say the first two are the strongest that we've been spending time on.
Great. Appreciate that. And then, Jorge, I know that G2 focuses a lot on fintech. Are there any areas within fintech that are particularly exciting for you?
There are so many holes in the in the fintech infrastructure in Latin America that you can basically do a very wide search. I mean, for example, let's take, for example, payments. International payments are very costly. If you want to send money from Mexico to the U.S., that costs more money than it should cost, and the other way around is also very expensive. But if you want to send money to countries like Bolivia or Argentina, that costs are huge. So, for example, international payments is something that we've invested for. One part of international payments is remittances, and it's impressive the kind of money that the guy that receives the remittance from the the U.S. based Mexican that crossed the border and want to send money to his family. The kind of money that the banks and other institutions are taking away from the recipient of that money is huge, and I think there are many ways to offset that very high cost. In terms of lending, the lack of access gives you high rates, but the lack of payment it really inhibits you from lowering those rates as you should. And I think that opportunities to lower the risk are very important. Alternative data scoring, the use of AI to really understand the lending horizon is actually something that we're very keen to. So to summarize, there are so many holes and so many opportunities in the fintech landscape in Latin America that you really can, you can be really expansive in terms of sectors.
Yeah, that's great. Really appreciate that insight. Rodolfo, what you talked about a lot about looking for painkiller type companies. What market sectors are you looking for companies that do some painkilling in?
Yeah, thanks, Michael. So we are a sector-focused fund. We started out investing mostly in transportation and supply chain and logistics, so that's where we gravitate towards. And in LATAM, where there's the supply chains are so fragmented, there's a huge opportunity, especially with the new technologies. We are seeing the first aggregators of data. Most of the supply chain logistics is based on hombres camión, small companies that have 10 or less trucks. That's where we're seeing a lot of potential opportunities. Also, at the same time, we're trying to help digitize legacy industries that have been slow to adopt new innovation, like in energy and manufacturing. So we're looking at other opportunities to help digitize the manufacturing plants in Mexico and LATAM and provide better data insights to make faster decisions and save some money on these capex heavy industries. So those are like the sectors we're looking at, not so much into fintech, although we look at fintech related to these spaces as well, and insurtech that revolves around mobility or transportation services.
That's great. That's great. Felipe, I know you said vertical investors really looking for structural advantage. What types of sectors are you looking at specifically for companies that have maybe a structural advantage that you can invest in?
Yeah, well, for the first fund, which most of them are B2B SaaS, the playbook was pretty straightforward. So we're very agnostic on the sector itself, but we always looked for companies that had predictable revenue. We can get there very quickly, and the playbook on how to scale pretty much was depending on the ticket size, the kind of the market and the channels that we're using. That changed completely, right? So most of our portfolio current, either they migrated to more native AI solutions or have AI layers on top of the original SaaS, and what we're working now is to understand how this becomes a defendable moat and how do we identify those companies going forward, right? I think this is a big challenge. At least I've been last weeks talking to a lot of my friends in the Bay Area, understanding how they're looking at it, and it's still pretty much open. So with that said, we're trying to look at more complex industries. So for different reasons, we ended up investing a lot in health tech, and we believe health tech, industrial compliance, supply chain, chain and other also regulated areas have some kind of defensibility that makes it a little more opportunistic in that sense, if you want to look at specific verticals, or the ones that create real ecosystems around them with embedded financial payments or embedded financial services, embedded insurance, or other kind of services that can be on top of that generate that moat again against a more straightforward solution. So we're still pretty much open on the sectors, even though probably more heavy regulated and health tech, supply chain, fintech, compliance are some of the areas we're looking more heavily on.
Excellent. Thank you for that. And Rodrigo, same question to you. What areas, what sectors of the market are most appealing to you right now?
So we look a lot at fintech infrastructure, less on the client side, more on how do I set up the rails for this to work. We think that's easier to translate into global expansion than just a direct-to-consumer credit or a direct-to-SMB credit. We also look a lot at healthcare. Brazil is the second largest private healthcare market in the world. And then lately, we've spent a lot of time on developer tools, especially things related to security and guardrails for AI, and how do we actually keep compliance in an AI native world. So those have been top of mind topics, but we are very agnostic on the top of the funnel because our bar is extremely high on people that can compete globally. So even if they're not in one of our preferred sectors, we'll look at it if it is the right founder.
Got it. Perfect. Well, like we said at the beginning, very timely. I think the whole upheaval with what's going on between SaaS and AI is causing a lot of consternation to a lot of the founders that we talk to here at Quorum. And really, for the founders that are listening today, you've heard everybody mention moat at least once already. We're 10 minutes in, and I think being able to explain and articulate and defend your moat, why it's so important, what makes you so unique is just something that everybody in the space is looking for and looking to understand when they take a closer look at your company. So appreciate the insights there. The next set of questions I think are going to take a little bit of a deeper dive into we'll call it investment and growth. So I want to start maybe in the middle with Rodolfo this time. Thinking back on maybe some of your past portfolio wins, what technologies or what types of companies make you the most excited to invest in, and specifically what are particular qualities that stood out from some of these past winners?
Thank you, Michael. There's so many different stories that we have backed, and they all come from different places, so it's hard to pinpoint one aspect, and I think we have covered some of that in the prior section. But just at the risk of repeating ourselves and sound like a broken record, I think it's a team. That's one of the things that have stood out through all of our investments. A team that really knew the industry and identified the problem, and they were probably prior operators in a big corporate dealing with these kind of issues, and then they decided to spin out and look for a solution to solve those kind of problems. Those are like the founders that we've seen have the best success. Not always, but that's been something that has stood out a couple of times. Just as an example, speaking about the supply chain and logistics, we invested in Solvento, a company in Mexico City, trying to provide financing instruments for carriers in Mexico that don't have access and have long working capital cycles. They were facing that problem themselves as operators and decided to start Solvento. And right now it's the Series A stage. We invested pre-seed. So it's still early in their journey, but they're having very good traction and scaling quickly. Similar with other companies we've seen, it's mostly around the team and identifying the right pain point and having those early customers to co-create the product with and start testing different alternatives to how to solve different issues. That's been one of the main characteristics that we're seeing in the company that we invested. Also, always the market and the timing is really important. It's hard to see it when you're investing or you're starting a company at any given point in time. It's not until later on that you can see that it was the right timing to start that company. And we saw it, for instance, in the early 2020s, we invested in a couple of EV electric vehicle companies, and that was the right moment to start those companies. There was a big boom, and then came the bust in 2022, 2023. So we were able to capitalize on that moment. That was also, it's a key component of venture. Being early is being wrong as well. So you have to find the right timing to invest in the different trends and technologies that are being adopted and have the momentum behind them to make them scalable. Just
Excellent.
Those are a couple of examples that I can think of right now at the top of mind.
No, that's great. Appreciate that. Jorge, maybe your thoughts on some past wins from your portfolios. What made you so excited about them? What qualities maybe stood out the most to you looking back?
I think the most important quality probably within the entrepreneurial community is intelligence. I think that intelligent founders understand what's going on and what needs to be done in order to escalate a company and to raise capital and to answer all the questions that the customers might have and the investors might have. I would say that probably, we invest very early in companies. So I would say probably half of the companies we've invested have experienced some sort of pivot to their business model, sometimes small, like, they went into B2C and then decided to go B2B2C, or they went into, software offering and decided later on that the transaction fees would make a lot more sense. That is something that speaks of intelligence from the founders to understand what's going on, what needs to be done in the company to take advantage of the opportunity, and what, and they're not afraid to take in the necessary steps to do a very big change if it's needed. And I would say a stubborn or an arrogant founder will not make those changes and will probably die. And we've seen a few of the companies in our portfolio die because the founder was not able and was not capable enough to do the right switch at the right time. So I think we're very much looking into the founder's experience and intelligence, if we can.
Excellent. Great answer. Appreciate that. Interested, Felipe, your thoughts. We've heard, team, intelligence, ability to pivot. What's on that list for you?
Yeah, no, I imagine we're just going to keep repeating the team because it's by far the most important piece of it and where I spend most of the time, right? With the team, with our team and their team, trying to understand not just the founder or the founder team, but actually the whole group that's actually leading most of the areas. I think that's for us is the key and getting excited initially. And besides intelligence, we look a lot for discipline. I think we have seen a lot of intelligent entrepreneurs, but that lack the discipline, or at least part of the team that lacks the discipline necessary to be able to go step by step. So we try to look, it's hard to understand if they really exist or not because everyone is selling themselves during that whole process, but we have been trying to find different ways to complement information. I even talk with, people who were roommates or classmates from them in high school, right? And that's why we stick to our geographies where we have that kind of network to be able to understand who we're talking to, right? That's part of the reasons we stay there. But besides, right. Once we feel comfortable with the team, what really gets me excited is companies that actually build ecosystems. I mentioned before around the solutions that they have, right? So LATAM, for example, has over 15,000 dentists, right? And once you have that kind of ecosystem, you can build financial products over the insurance products over that, and it starts growing. Same thing with the Totit, which has thousands of restaurants, and then you go into payments, and you go into financial services, and you can go into other. Or LeadMe has thousands of schools, or Queiron has hundreds of hospitals and clinics, right? So we have this kind of companies that are able to create an ecosystem around the product, and then it becomes a huge value proposition for everyone there, and you start getting network effects, and you get other things that are besides the product. Obviously, you have to have a great technical team that is able to always be up to date and adding more value through the product itself, but also the ecosystem itself is the one that generates that flywheel that we love and see it, right? And those are the ones that get me most excited when we're trying to figure out how to build that.
Excellent. Love that ecosystem example. It's perfect. Alejandro, at the risk of sounding repetitive, but maybe what were you most excited about in terms of maybe some of your past wins in your portfolio?
Yeah, so when we look at our past wins, Michael, it's really tough to find like a common denominator that is not everything that my colleagues have already mentioned, which is the team. Now we look at Encode, for example, which is a company that's operating on a worldwide status today. We invested very, very early in their seed round. Kushki, which is a cross-border payment company that is also all around Latin America. We invested in their Series A when they wanted to come to Mexico. And Ben and Frank, which is a direct-to-consumer, as I mentioned, we're shying away from direct-to-consumer, but this is one of our big wins in the eyewear brand sector, is a company that today is present in 3 countries and is scaling crazy. And again, I think that the only common denominator between the 3, because we invested in different stages, these are 3 very different industries, these are 3 different business models, but at the end, they're very strong founders who understand both the technology and the execution. I think that, discipline is something that I would say they all have in common. They all have great salespersons within their team. Most of the time, the founders or the CEOs have this amazing ability to sell, and it's not only to sell their product or service, but it's having the ability to sell in order to raise capital, in order to hire people and get the best talent, in order to sell the actual company eventually. So I do believe that having that sales mentality is very, very important. I think it also might be a common denominator between all of these successes. And I think the best ones always combine ambition, that has already been mentioned, but with, let's call it, operational sobriety. So, the biggest lessons that I get from these types of founders is that they're building a real business. They're not building a fundraising narrative. And many times, and we saw it in 2021, people raised capital for the sake of raising capital, and again, growth at all costs. And these businesses that have been our winners in our portfolios have been, again, very, very disciplined, and they've had that mindset of, we're going to create a very strong business, not only in bull markets, but also in times when it's tough, we can keep going. And I think that, that's very, very important, and that's a characteristic that we'd love to see as well.
Great answer. I love build a real business. It's such great advice. Rodrigo, I'll ask you if anything stand out, but maybe a little bit different on this one. Maybe something that you're seeing in Brazil. It's getting you excited.
No, I think it's very similar, right? There is an optionality value that's enormous of being alive. And it is very different from the US, where there is plenty of liquidity and you can raise capital until you grow and you get discipline and you have all the controls. In LATAM, you might have capital, you might not. And having the discipline to actually manage the business to accommodate for that gives you the optionality of getting lucky, right? To get lucky and your product eventually click and work and scale, you need to be alive. If you die in 18 months, you never get lucky, right? So that discipline is key. Understanding the market you're in is key. So if you take some of my biggest successes, these guys had built already a unicorn in credit card payments. They went out and used the modern technology to build it again, and that became core banking solution that we sold to Visa, right? iFood, these guys had run a food delivery business for years with a magazine and a call center, and decided to move that online. So they understood the pains of the restaurants very, very, very well when we invested. So getting to that level of domain expertise again, and I know people touched on it, maybe makes you a little bit more stubborn. Than to counterpoint on Jorge. I think some of the best calls that our founders made were against what we as investors believed because they knew the market better. And they made the call, we stood by them, and they were very successful in doing so.
True partnership. I like it. See here. Well, appreciate your insights there. I think I mentioned this a few minutes ago, but wanted to maybe double click a little bit on AI. And maybe I'll start with you, Felipe. How would you answer this question? How have the latest advances in generative AI technology changed your investment thesis, if at all?
Completely. Not just investment thesis, actually how we do investment as well, right? So we not only change our thesis, but internally we have been changing how we operate. And I think it's going to be cross, because most of our portfolio companies and the companies we look into is either both use internally AI for many things, obviously from development to sales cycle to other services that before were not available and really exceed what they were able to do before, to the product itself, to the customer, right? So actually I was having this conversation last week with one of the founders, CTOs of the company, that he just rebuilt the whole product in 4 days, something that took him before 6 months with 6 people. He did it. So I wanted to understand a little bit of, besides everything doing parallel, what are the key takeaways he took? And one really stand out is like the cost of just dropping it and doing it again now became almost zero. So he told me before, you had a team, you have to explain, they went out, they developed, they came back, 2 weeks later, they were able to put this together, and they saw, the architecture was not the right fit, but there were already a lot of cost involved in it. So they tried to fix it and took another weeks and build around it. Today, he just drops it and starts again, right? And that iteration, that speed of being able to iterate to get to the right product without having that cost is huge, right? So both internally, then you see the sales teams. I mean, imagine most of you have seen how all the sales process in the B2B, it's been, speed up completely and redone, rebuilt with AI, and the product themselves, right? What before for us was a normal, defensibility model, big software, hard to replicate, distributed costs, a lot of customers, typical SaaS model. Today, that doesn't count, right? And we see that AI not only changes how we are offering, but will change the market itself. So a lot of the SaaS, I don't believe the SaaS will go away. I personally think that there's a big hate, and we'll see what happens in the future. But what will happen is that we're going to reduce the amount of users, right? And a lot of these companies pretty much sell amount of users, and we're going to have less users because there's going to be a lot of automation, a lot of things that are not going to be done. Teams are much smaller. So the total expenditure is going to be there. The distribution, how it's spent, is probably going to be very different, right? And I think that's how we're thinking about it when we look into the new opportunities and how we help our current companies transform and actually see this as an opportunity more than just a threat.
Great answer. Rodolfo, I saw you shaking your head. You want to add to that?
Sorry, I didn't mean to shake my head at all.
Agree.
I agree with what Felipe was saying. I also believe the SaaS apocalypse is overblown. I think SaaS companies are here to stay. They need to improve their products and embed AI into that. But just going back to the main point that Felipe was trying to make, I think it's the technical barrier has been lowered significantly. And I think LATAM teams can compete and develop at the same speed as US or EU teams. And that's created a great excitement for us and see how founders are using new tools to develop their companies. It's faster to prototype, and now new business models and new things are being developed that couldn't be done earlier without this technology. Like in supply chain, there's a lot of AI being used to digitize all the paperwork and workflows between all the different stakeholders that took, 15 different calls, faxes, you name it. Now that's being automated through an AI agent. Same for predictive maintenance at the factory level. You didn't know when a machine was going to stop working and why that happened. Now with the predictive models in AI, you can do some predictive maintenance around that. For instance, in car dealership as well, we've seen vertical AI bots or agents picking up calls. Sometimes you call the car dealer and they're back in the garage serving customers, and a lot of calls go unanswered, and that's lost revenue for the dealer. Now there is AI agents that can follow up, register in the CRM, in the SaaS CRM, and then follow up through a human. So there's a lot of technologies that are coming up that, like I said, these business models weren't possible 3 years ago, and now it's creating a lot of a new world of possibilities for these founders.
Excellent. Jorge, maybe you can give us kind of your thoughts on how Gen AI or AI generally has changed your investment thesis in the fintech space.
I think you have to look into the capabilities of the business proposition, and then the team, and the AI capabilities of the software or whatever they're bringing is probably now the biggest part of what you're trying to assess, because it's going to change all the processes. For example, in fintech, you have to look at risks, right? And I think that all the risk evaluation and all the risk analysis is fundamentally changed with AI. And risk is involved in lending, risks involved in international payments, risks involved in many things that are part of the infrastructure of fintech. And I think that's changed dramatically with AI. So when you have, again, the intelligent founder that can, reach out and understand what needs to be done in terms of the product and the offering, because AI is so, present and available right now, that's part of what you're going to try to evaluate when you invest, and that's something that, all of our portfolio companies have some sort of AI strategy in place. I'm sure that everybody is looking into it or doing very aggressively. And many companies in our portfolio were built based on AI, specifically in terms of credit risk, and they were all based on AI, from years from now. I mean, years ago.
That's a great answer. Really, really enjoy that insight. I'll go over to you, Rodrigo. Share with us a little bit about how AI's maybe changed your investment thesis.
It changed marginally, because I think the biggest impact is going to be in the simpler software, mostly SMB software. That's going to face enormous amount of competition, right? Now every person can create their own version of a simple software and implement, and price competition is going to go significantly higher. Whereas enterprise is harder. It's harder to see big, complex enterprise software getting replaced quickly. All the banks are still sitting on 1960s mainframes with COBOL, right? Just the change management is very slow. So there is still a long time for somebody to actually trust self-development to a state where they can move their core processing away from a SaaS with a non-provider to whatever their team internally built, right? And then there's maintenance, observability, and updates into that software. So there will be a component of software that will stay on, and it's more on the enterprise side. Where we've seen an interesting evolution is that the companies that have the installed base, if they're quick, and this is a big if, right? They have a leg up on the challengers, because you can develop the product very quickly. Implementing and integrating into the existing software is hard, and people are very concerned about security. So if you already have that layer that has access to the data of your client, and you implement the right agents on top of it, you can be much more valuable. So I think there is an initial moment where tickets in enterprise software are going to go up, because I'm not only selling software now, I'm actually selling software plus labor that was running that software. Eventually, price competition will bring it down, But I think there is an interesting moment here for people that already have installed base to actually capture more value in this market.
I come from the banking world, so scary how much of important infrastructure is still on COBOL. So totally hear you on that one.
It's telecom, it's utilities, it's the IRS. Like every single big system still sits on a mainframe.
Scary. Opportunity though. I'll leave it for you to close this one out, Alejandro. Tell us more about how Gen AI maybe has changed your investment thesis.
Yeah, I mean, I don't want to repeat anything that I was already said, but I think that what we're seeing today is kind of tough to really grasp, just because I think we're in the middle of the whole, movement, and when you're in the eye of the hurricane, it's kind of tough to really see beyond it. So I think we'll see how this plays out. But what we're definitely seeing today that AI is not optional. No, everybody's using it, and specifically in LATAM, every single company, whether they are AI native or they adopted it, are using it to reduce operational inefficiencies, to enable leaner teams, lower CAC. And so I guess the question that we are struggling with today, and we're looking forward to seeing what happens, is if founders are going to be able to operate more efficiently because of Gen AI, and we obviously believe that that's going to be the case, then new companies, startups, can launch with dramatically less people, less tech staff, completely rescope their tech roles, and this should lead to needing less cash to fund and start your businesses. So if you're going to need less capital and you can scale more quickly, I believe LATAM is going to be in a very interesting position, because historically we've lacked capital, and the rounds that we've raised here are definitely nowhere near what, the rounds that are being raised in the United States or in Europe or in Asia. But if, capital stops being a constraint, and with Gen AI, you're going to be able to build at a much quicker and with the same quality pace as competitors, I believe that, Latin American talent is definitely there. So it should be a very good option, and very good times for Latin American, both founders as well as investors.
That's such a great insight. Thank you for sharing that. Really brings kind of everybody on more of an equal playing foot with the same amount of capital, but the ability to be more nimble. Just a great insight there. I'm going to stick with you, Alejandro, and maybe on the more qualitative side of things. Really want to get your insights and advice for founders. So for entrepreneurs, what are maybe some typical mistakes that you've seen, founders make or entrepreneurs make? And then secondly, what advice would you give an entrepreneur considering bringing in a financial partner in today's climate?
Sure, Michael. So I guess I'll start with the latter question, because that's going to lead to the mistakes that we've seen. And my advice for entrepreneurs when raising capital is always, you have to really understand who's on the other side of the table. I write occasionally on a blog, and I wrote one that I really liked that talks about that when you're pitching to a VC, it's not an interview. It should be treated more like a date, in the sense that I'm not going to only ask Michael, hey, Michael, tell me about you, and then the interview's over. No, we really have to get to know each other. And if Dila's going to invest in Michael's company, then Michael has to understand Dila just as well as we have to understand Michael's company. And, we're going to get married, and this partnership, if everything goes well, is going to last at least 10 years. And so you really have to understand who you're partnering with. Not all money is the same. A lot of founders confuse valuation with value, and that's a huge mistake. And so most of the mistakes that we've seen founders make is not really understanding why they're raising capital, why they need to raise capital, how much capital they need to raise, and who's the right partner for that capital raise. And again, my capital, if you just look at my money, our money is exactly the same as Rodolfo or Felipe or Jorge or Rodrigo's money. But the value that each of us brings is very, very different. If you want to operate a business in Brazil, don't come to Dila. It makes absolutely no sense. Rodrigo's going to add 1,000 times more value than we are. We don't know anybody in Brazil, and so Rodrigo's the right partner for your firm. If you're looking to Mexico, then you come to Rodolfo or Jorge or myself, depending on the stage, And so again, the biggest mistake that we've seen is that they really don't understand why they're raising capital, and they just accept capital for the sake of accepting capital. And so they might be raising too much capital too early, and that's going to lead to dilution, or they're going to again, confuse valuation with value, and so they don't really bring in smart money to their company. So my biggest advice there is really diligence who you're going to partner with, and hopefully you'll have the opportunity to choose your investors and not only accept the best valuation out there.
Yep. Great advice. Wish everybody took that to heart, and it's really valuable insights there. Maybe speaking of Brazil and Rodrigo, I'll ask for your opinions on that one. So, question is, what are mistakes you see entrepreneurs make, and what advice would you give an entrepreneur before bringing on a financial partner to their business?
I couldn't agree more with Alejandro. Right, not all money is created equal, and the fund and the person that you bring on will impact significantly your firm, right? It will also impact your board dynamics, how decisions are made, what level of ambition are you underwriting, and you have to make sure that you're aligned. But also to that, you have to know that if you need venture capital, right? Once you get into the venture capital path, it's very hard to exit because we give you X $1 million for you to spend in 18 months or 24 months. So by the time the money ends, you need to raise again. And for an enormous amount of companies, that's not the best path forward, right? Because your exit's going to be too small for a second raise, or because your ambition is not that. Maybe you don't want to run $1 billion business. You just want to make $50 million and retire, and that's fine. That's a perfectly legitimate answer. But you have to know what you want and what's the funding adequate to what you want, right? It's a very uncomfortable situation when the founder says, I'm very comfortable where I am. I'm going to sell this company for $100 million. I have 80% of it. I'm rich. And we're going to say, no, you're not going to sell this company because that's not what we're underwriting for. It becomes a very awkward situation. So align your objectives with your investors and make sure that you're tapping on the adequate sources of funding for whatever you want to build.
Great insights. Thank you for that. Felipe, what's your thoughts on that?
So first, just to build on that, because I believe what Alejandro and Rodrigo is one of the key elements. The founders have to do their own due diligence. So I always tell them, you pick any founders that we have worked with previously and do the diligence, understand how we work. And also, we want to understand what your thought. Don't try to change, because I've seen a lot of them, the speech, depending on who they're talking to. I think they have to find the right partner. Obviously, when you have that possibility, it's easy to say. When you're trying to just get through, you end up accepting whatever you can find. But if you're doing it correctly, you have to find the right partner that aligns with your strategy as a founder, and not the other way around. I think that's critical. If not, you're just going to buy a problem in the near future. Another that I've seen in some of the occasions, particularly in the old B2B SaaS model, I think now we're going to see a little different. But on the B2B, is when after they raise, and as Alejandro said, you have to understand very how much you want to raise, but you start deploying, right? And the first thing, you never take into account that building a team takes a lot of time and resources, because of the people, more than the actual money. It's like building a good team, particularly when you're trying to do 3 or 4 countries in parallel and grow. It's much more time consuming and can lead to many other errors, particularly if you don't have all the metrics beforehand, right? So one of the things that we we put a lot of effort is to understand that the company has the right metric for doing the profiling of who they're going to hire, understanding how to do the onboarding as fast as they can, and then understanding if that person is the right person very quickly or not. Because if you grow very fast with the wrong people, you're not only spending a bad time and money, but also you start losing the culture and the capability of understanding what's happening with the company, because you start putting middlemen between the founders and the execution, right? And we have seen how sometimes we have to pull back and rebuild the team because of that, right? So now we take the time to understand the right metrics and culture before we speed up the hiring piece. That I think we have done supporting founders a lot of mistakes trying to build too quickly when we don't have the metric. When you have the metrics and the culture and the right person leading that, it can be done. But if not, you can buy a big problem 9 months, 12 months afterwards.
Awesome insights. Appreciate that. Maybe Jorge and Rodolfo, I'll switch the question up just a little bit for you two. But really interested to get kind of an investor perspective on this. But Jorge, why should entrepreneurs consider looking for investment versus maybe taking the M&A path? What are your thoughts there?
I think that all founders should look into M&A at some point. And I'm not, I think the whole VC system, the whole entrepreneurial community in Latin America is in its infancy in terms of understanding the whole VC concept and what's going on. They don't understand what is a VC fund. They don't understand that we have LPs, that we have to deliver some results, that we have to deliver money, not stock or any. And we have to bring back money to the investor and so on. They don't understand the whole process, and they really are not empathetic to what the VCs need in order to be successful as well. So I think there's a lot of education that needs to take place, and part of it is that you are going to sell your company sooner or later. Maybe you're going to change your investors from some VC investors like ourselves to maybe strategic investors that will buy us out. Maybe you will go public. Maybe you'll sell the company to a third party and get cashed out. But you have to think and look into M&A at all times. And I would say that is something that probably founders are not even aware of at this point. And I think it is very important that the job that you guys at Quorum do to educate everyone around the M&A process, and I congratulate you on that. I think many companies in our portfolios should look a lot more into what's going on in M&A, what's the real valuation, what can they accomplish in an M&A transaction, who are the potential buyers, what's the inclination and what's the motivation of a potential buyer. And I think it starts very early. We are not funding companies to create patrimonial businesses for the founders and to make sure they pay their payrolls. We don't care about that, right? And they probably don't understand that knowledge. And I think it's very important to provide education for all the founders and all the participants in the entrepreneurial ecosystem.
Love those insights. Thanks, Jorge. And then Rodolfo, I'll leave it up to you to kind of wrap us up. What are your thoughts on, what advice can you give an entrepreneur looking at maybe investment versus M&A path?
Yeah, I'm just going back to Jorge's last point, I think, and maybe Alejandro's first point. Founders need to know who's on the other side of the table. If they take venture capital, it's like putting a firecracker under your chair. You're expected to grow significantly, and like Jorge said, it's not a patrimonial business. Funds are looking for big exits and to be able to return the fund. So that's a key component that founders need to understand. Another one is it depends on the stage of the life cycle of the company that you're in. If you're looking for an exit, it's an opportunity cost. Can you provide more value to your shareholders by raising more capital and continue deploying and executing, or have you reached like a peak in your cycle, in your market, and you're ready to sell? So that's a big component. I think as we were talking about the advice or mistakes that we've seen before, is being very focused. I think most startups die of an abundance of opportunities versus a lack of opportunities. So being very focused on developing your business model, your market, and growing the company until it's at the right stage to look for an exit. And there's a saying that I like, that it's companies are not sold, they're bought. So from early on, founders need to start working on those strategic relationships, commercial relationships, and having top of mind the potential acquirers in the future. Even if you're not willing to sell today, I've seen great founders that they have in one of their drawers in their desk, they have the list of the 10 potential acquirers of their company 5 years down the road or 10 years down the road. And they start developing those relationships via commercial partnerships, so just attending conferences and making sure they know the right people at those companies. Because the worst thing that can happen is, we're the eternal optimists as a VC, and you want to see the founder succeed. And sometimes you say, okay, the company has 6 months of runway. We're very close to getting an inflection point, and then there's only 3 months of runway, 2 months of runway, and then you want to start a sales process. That's going to be a total failure. So you need to have that in advance and make sure that you know who the right parties are, and give yourself at least half a year to a year in advance to start the discussions of a potential exit, and not be caught with your fingers on the door and without any options, because then you're going to lose all the value for all of your shareholders.
Great. Well, so much wisdom, so much insight. Appreciate everybody. It's an honor to have spent the last hour with you. So I think today's discussion really, makes clear that LATAM is, no longer just an emerging story. It's really a market defined by disciplined founders and increasingly sophisticated capital and real category leaders that are being built at scale. So I just want to thank each of you for sharing your perspective, and thanks to everybody that's joined us today. We appreciate the time and the continued commitment to strengthening the LATAM ecosystem. Back to you, Steve.